All right, so today we're going to be talking about what are psychological levels in Forex. How do you trade based off of them? Should you always close your trade if it hits the psychological level? And how do you go about actually using the psychological levels to make profits in the markets? So first things first, what is a psychological level? All a psychological level really is, it's a price of the Forex pair that you're looking at, which is a round number. The reason why it's important and it's called psychological is because all of the other traders in the markets are also going to be looking at these same levels, and they're going to trade based off of those levels. So an easy example I can give you was a couple of years ago when Euro USD hit 1.00. Every single trader in the world and every investor and every hedge fund was looking at that price level. So you can already expect that if you're in a sell from 1.01 and you're expecting it to go down to 0.99, then you should probably consider closing out profits at 1.00. Now let me show you some examples in the charts of this so you guys can see what I'm talking about. So let's just go right here to Euro AUD has been holding psychological levels extremely strong lately. Because if you take a look right here at 1.81, it found an area of resistance. Down here, price found an area of support close to 1.77000. So what are psychological levels? It's round numbers like this, 1.8100. Or for example, on GBP JPY, this is probably the best example I have right now. Price just came into 200.000, so 200.3 zeros. That's a very round number. And it's also a very important number because all the other traders are going to be looking at that same price level. If you look at GBP JPY, and I called out buys for a lot of people on my stories earlier this week, if you took the buys, the best price to get out at is as soon as price starts to reach close to 200.0, because that's where the market is going to start rejecting. So what happens at psychological levels? The market will start to reject. It'll find support or resistance at these psychological levels. So a great example is also 198. So if I bring this zone down just into 1.98, so if you look here on the right side of the screen, why did price come right into 198 and then reject immediately off of it? It's not a coincidence. This happens for a reason. All of the other market participants are looking at that same exact level and they are entering in trades and they have buy limits, sell limits. They have a lot of orders at these trades. And this is not some conspiracy theory. It's not anything related to like SMC or ICT or anything like that. It's just basic understanding of how the markets move. The markets are moved by human emotions. So when you reach these round levels like 197, you can't help but take a trade there. It's like if you're gonna go buy a pair of shoes and the price is $299 instead of $310, you're way more likely to buy it at $299 than at $310. Even though it's only a $10 difference and it's only like a 3% difference in the price, you're just so much more likely to buy it off of a psychological price point. And the same exact thing happens in trading, because you can look at trading like I'll buy GBP JPY at 98 and you'll buy it at 199. So I can make money by selling it to you at 199, but I'm gonna buy it at 198. So literally just imagine this, like if you were buying a pair of shoes. Understand that at these price levels, you're gonna have more buyers, or at the top psychological levels, you're gonna have more sellers, which is why also on AUD CAD, this is a trade that I'm in right now, the second that price started reaching 0.9, so like literally 90,000, 0.9 and then 4 zeros behind it, the market immediately started to reject, because it's just obvious. The market is going to reject such a strong area of resistance. You know, one thing that I could have done to benefit my trade here would have been to take out some profit at 0.89, which is right here. And guess what? Price actually found support at that exact price level. And one thing that I'm realizing nowadays, guys, the markets in Forex are actually respecting the psychological levels more than they ever have before. At least from my experience in these past couple of weeks, the markets have really been respecting these levels. So it's important to understand them and to watch out for them. One key tip I can give you is to mark your areas of support or resistance right at these psychological levels. Let's just take a look at another pair. For example, USD CAD. This was such a great pair because the second that we started trading above 1.36500, I knew we were going to most likely continue to go bullish. Price had held 1.36500 multiple times in the past, and if it held it as resistance and it is a psychological level, then upon the break of a psychological level, you can expect a continuation. That's another way that I use these levels to make money. Because yeah, they usually act as support or resistance. But if you break a psychological level, you're gonna fly or you're gonna melt down. And I actually used this a while back on USD CAD to take sells. There was a specific psychological level. Let me see if I find it now. Yeah, right here, 1.39. I knew that the market was gonna sell off the second that price broke below 1.39. Realize that the market rejected 1.39 once, rejected 1.39 twice, and then was finally able to break below it on May 20th. Do you think it's a coincidence that we broke 1.39 thousand around psychological level, and then the market continued to melt down for hundreds and hundreds of pips? That is not a coincidence. It's obvious that the market reacts off of these levels, and all of the participants of the market, the hedge funds, the banks, the institutions, everyone, the countries that are transacting volume and currencies within each other. Do you think it's a coincidence that the second that it broke below, everyone just entered in sells? Obviously not. This is literally how the market moves. And even recently, I would say that the market has been respecting these price levels more than ever. So just make sure to take a look at them, mark them on your chart, use them as support or resistance, but also use them as an extra confluence for your trades. If you use these levels, you tie that into support and resistance, you tie that into our strategy, which uses moving average and multiple time frame confluence and alignment, you're good. You're gonna make a lot of profits. You don't even have to worry about where to enter, where to close. Just use these psychological levels. Place your take profit right below 1. Place your entry at 1 if you're looking to buy. And if price breaks a psychological level, just know that there's an extremely high likelihood that a price is going to continue in the direction that it broke out of. And one key tip that I can give you is don't ever place a take profit above a psychological level. So if I'm looking to buy USD CAD right now, let's say I place my stop loss down here and I want to have a take profit of 120 pips. This is a huge mistake because I'm placing my take profit above 1.38 psychological level. It doesn't mean you can never do this, but if you do this, you have to have some profit being taken out at the major level. So I would have to take out profit here and move my stop loss up to break even, because the probability that the market is going to reverse at 1.38 is pretty high, or at least get a strong reaction off of it. So the only logical thing to do is to place some profit at this level. It's extremely important that you follow this rule, because I see so many traders buying into a psychological resistance, and then they ask me, why did they lose the trade? What do you mean, why did you lose the trade? You took a buy into a psychological level. It's just obvious. It's like buying GBP/JPY at 200. Why would you do that? You just don't ever buy at psychological levels, and you don't place your take profit above 1. So like the worst mistake you can do is have your take profit be 200.2. Just take it out at 200, because that's where it's gonna get out at. And if you haven't applied for the 30-day profit blueprint, make sure to do that in the description below. I'm gonna be looking over some of the applications today and tomorrow. So I'll catch you in the next one.